We've all been told by our parents and grandparents that keeping money in the bank is the best way to save and grow it. But that's not the truth. While your bank account balance may go up a little with interest, the value of that money is actually going down, especially with prices rising everywhere and inflation eating away at it. This advice comes from having a low financial literacy, and today we will talk about some different strategies with the potential for higher yield. So what's really happening when you park your money in the bank, in most cases, is that your cash is losing value over time. In this video, I'll tell you about some smart assets you can invest in that will protect your money from shrinking. Precious metals like gold, silver, and platinum. Let's start with something known as God's money: gold, silver, and platinum. These are called precious metals because they are rare and valuable. Governments keep printing more and more money to deal with imbalanced budgets and debt, but that makes our currency worth less. This is why the rich always keep a part of their savings in something that can't just be simply created out of thin air, like precious metals. Gold, for example, has always been a safe investment. Back in the 1950s, you could buy an ounce of gold for around $400. Today, in 2024, that same ounce is worth over $2,673. And experts predict that in about 10 years, this price could go up to $10,000. This means that if you invest in gold today, your money could grow 5 times by 2032. That's why it's smarter to keep some of your wealth in gold rather than let your cash sit in a bank. Now, you don't even need to buy physical gold bars or coins to invest. There's something called gold ETFs, which let you invest in gold without actually holding it. It's a convenient way to grow your money as gold prices rise. Raw materials or industrial commodities. Next, we have industrial commodities, basically the raw materials that are used in industries all over the world. Why are these important? Well, metals like silver, nickel, and copper are used in everything from electronics to cars. For example, nickel and copper are essential in making batteries for electric cars, which are becoming more and more popular. While cobalt was once in high demand for its use in electric vehicle batteries, its price has dropped significantly in recent times. This shows how market conditions can affect raw material prices. Investing in these kinds of raw materials during high demand phases can help your portfolio grow, but it's also important to pay attention to market trends. If buying and storing raw materials like copper or nickel isn't practical, you can invest in companies that mine these materials, like Rio Tinto, or consider mutual funds focused on these industries. Another option is to trade in futures or options, which let you invest in raw materials without actually having to own them. Safe haven currencies. Now let's talk about money. Not the money you have in your pocket, but the type of money you hold. In today's world, no currency is backed in its entirety by gold. Instead, it's supported by the strength of a country's economy. This is why the rich often keep their money in stable countries like Switzerland. Swiss banks are known for being safe, and the Swiss franc is considered by some to be a safe haven currency. When the world is going through a crisis, like the 2008 financial meltdown or the recent Russia-Ukraine conflict, people look for places to park their money safely. Many times, they turn to the Swiss franc, which stays strong when other currencies are losing value. If you're looking to invest in currencies like the Swiss franc, British pound, or Chinese yuan, but don't have access to a Swiss bank account, there are other ways. You can invest in currency ETFs or use forex brokers, which let you start investing with as little as $100. Government-backed securities. Have you ever looked at a dollar bill and noticed the words, quote, "This note is legal tender for all debts, public and private," end quote? This basically means that the money is backed by the US government. Since 1971, when President Nixon took the dollar off the gold standard, paper money has been supported by the government's credit. In simple terms, your money is only as strong as the country that prints it. Governments rarely fail, and they usually only collapse in extreme cases. That's why many people invest in government-backed securities like treasury bonds. These are among the safest investments, because if the government doesn't pay its debts, it means the whole country is in trouble. If you want to invest in government-backed securities in the US, you can buy treasury bills, notes, and bonds. These provide a safer return than letting your money sit in the bank, and small investors can easily buy them online through the Treasury Direct website or in the secondary market. Value stocks and mutual funds. Treasury investments are safe, but they don't give you the highest returns. Stocks, on the other hand, offer the potential for much better returns, although they come with some risk of market fluctuation. However, some stocks and markets are more risky than others. In general, there are two types of stocks: growth stocks and value stocks. Growth stocks, like those in technology, are riskier because they deal with new ideas and products that might fail. On the other hand, value stocks come from well-established companies, like those that deal in raw materials or essential goods. These companies are more stable because there's always demand for what they produce. Investing in value stocks can provide steady returns, but researching which ones to buy can be time-consuming. That's where mutual funds and electronically traded funds, or ETFs, come in. They allow you to invest in a collection of stocks or other financial instruments without doing all the research yourself. A good example is the Vanguard High Dividend Yield Index Fund, which focuses on stocks that pay stable dividends over time. Land and real estate. Land is one of the best investments you can make because it rarely loses its value, especially over the long term. There's only so much land on Earth, and it's always in demand. Whether it's for homes, schools, factories, or commercial spaces, land will always be needed. Real estate, like houses, office buildings, or stores, is also a great investment that tends to go up in value over time. According to a Bloomberg study, housing prices tripled between 1992 and 2020. Even though there was a dip during the 2008 housing crisis, real estate remains a solid investment, especially when cash loses value. Many people think they need to be older and wealthier before they start investing in real estate. But that's not true. You don't need to have a lot of money to get into real estate. You can start small by investing in REITs, or real estate investment trusts, which work like mutual funds or ETFs, but focus on real estate. One example is Ventas Incorporated, which invests in healthcare real estate like senior housing and hospitals. Alternatively, you could buy a rental property and let the rent cover your expenses and mortgage payments while earning a profit. Collectibles. Finally, let's talk about collectibles. These are things like vintage cars, rare art pieces, luxury handbags, limited edition watches, and first edition books. While regular cars lose value as soon as they hit the road, vintage cars get more valuable with time, just like fine wine. In 2022, a rare 1955 Mercedes-Benz sold for 135 million euros because only 2 of those cars were ever made. And in 2017, Leonardo da Vinci's painting Salvator Mundi sold for $450 million. These kinds of items are rare and unique, which is why they can fetch such high prices. For most of us, investing in things like vintage cars or rare art might seem out of reach, but there are platforms like Whatnot that allow you to buy and sell collectibles like baseball cards, comic books, and action figures. You can even invest in partial ownership of collectibles through platforms like Masterworks. By spreading your investments across these 6 types of assets, you can protect your money from losing value and build wealth that lasts for generations. If you found this video helpful, don't forget to hit the like button, subscribe for more content, and leave a comment below. I'd love to hear from you. Which asset do you think is the best for long-term wealth? Let me know in the comments.